Next up, we have Metallum Resources. It's a Canadian junior-based metal company that's a focus on zinc and copper. Its flagship project is the high-grade Superior Lake zinc copper polymetallic project. It's located roughly 150 kilometers east of Thunder Bay in Ontario, and it's connected to the Trans-Canada Highway with a 20-kilometer year-round road. It is a past-producing mine with a history of excellent recoveries, free from deleterious materials and with very low production costs. Here to tell us more is Kerem Usenmez. He is CEO. He's a geological engineer and a mining entrepreneur with over 20 years of global experience. And he's worked in various technical and leadership roles over that time. Kerem, are you there? Can we see you? If you want to click on your video and your mute button, there you are. Welcome to the Global Mining Symposium. Nice to see you. And where are you joining us from?
Thank you for having me. I'm very excited. Great line of speakers. I'm currently in Oakville at home, Oakville, Ontario.
Very good. My hometown. That's where I grew up until I came to the big city of Toronto when I was 19. And I've been here ever since. The big city swallowed me up, but a beautiful, beautiful town. And I still have family there. So
absolutely.
Hello to Oakville. Yeah. Super, Kerem. Okay, listen, I'll turn it over to you and you can get all of our investor delegates up to speed on what you and your team are up to.
Absolutely. Thank you for the opportunity. I hope everybody can see it. I'm going to move my camera. Okay, so yeah, thank you for the intro. This is a former producing mine. So it's, I wanted to show this cover slide a little bit because there's infrastructure that it's showing part of the infrastructure on our flagship project. Not many development projects has this kind of infrastructure. You see the tailings dam, the polishing pond, settling pond, and even the active water treatment plant on the, I don't know if you can see my cursor, but it's around here. So it's a past producing mine, which was closed at the end of 90s, over 10 years of mine life of production. And the reason was that the zinc prices were very low at the time. Now that the zinc prices are high and going high and high every month, we're looking at reopening the mine. So, oops. So I strongly urge everyone to read the cautionary notes, as there might be some forward-looking statements. So yeah, our project is at the development stage of the Lassonde curve. In fact, it's at the bottom, so it should go up. We acquired this asset from Superior Lake Resources earlier this year, who at the time wanted a Canadian team to build this mine. And with COVID, it was getting even more difficult to run from Australia. So we did the deal in 2020, but closed the deal earlier this year and started trading in April. So with that, they became our biggest shareholder. So the shares are tightly held. About 80% is institutional with Superior and insiders. I personally have invested and continue to do so. And the Australians had published a feasibility study under JORC Australian standards, which we weren't able to refer to. So we didn't do a lot of marketing until now. So just started doing the roadshow, and because we published the 43-101 compliant for feasibility study in October. So the feasibility study basically outlines the robust economics and how attractive this project is. In fact, it's one of the lowest cost quartile of zinc producer, which is driven by exceptionally high grade ore. It is the highest grade zinc development project out there right now. The remaining ore, based on our 43-101 resource, is sitting at 2.4 million tons at 18% zinc, close to 1% copper, and some precious metals. But everybody loves gold, so gold equivalent for this resource is at 13 grams per ton at 1 million ounces. That's like super high grade in any way you look at it. So, but also feasibility study looked into the cost, obviously. So after tax, all-in sustaining cost is at 41 cents per pound, with today's zinc prices of around 1.5, 1.55 zinc per pound. This is giving us a lot of room. It's like 4 times. So a lot of room for sheltered from the volatility, natural volatility of zinc. But the infrastructure in place also provides low capital investment and also low operating costs as well. This includes the underground development that's in place. It will generate roughly about 95 million Canadian dollars per year over the life of mine. And on the zinc market, zinc prices are at, zinc stocks, zinc inventories are at critical lows, which is pushing the price up, as well as the analysts. I was in London, the analysts are expecting it to remain low in the next 5 to 7 years, this shortage. So the power shortage also forced European smelters recently to close or go half capacity. So demand is expected to grow, especially with the over $1 trillion infrastructure investment that US just announced this week. That translates right into zinc and copper. So our company also has a very low market cap compared to our NPV, net asset value, net present value, any way you look at it. Roughly around, it's at 5% of the project NPV at the moment. The global industry standard for that valuation is around 0.2 to 0.5%. Ours is at 5%, which means that we're undervalued for about at least 4 times the share price of 9 cents, which is slightly lower today. So it's a lot more room to grow based on the asset value. So reason for that is partly because we just acquired this asset and just started doing the marketing. So hopefully we'll see the results. So bottom line, Metallum is very well positioned to provide high quality zinc concentrate for the years to come. And it's essentially the great timing to invest. So what's the opportunity? Out of 117 development projects, assets over 5% zinc worldwide, most of them are in difficult jurisdictions. So we eliminated those, and we eliminated the lower grade ones, zinc equivalent 10% or zinc grade 7% or over, and compared ours. And then we looked at the volume, basically fitting that criteria, and there are over 400,000 tons of zinc. There's only 5 assets that fit these criteria. This alone shows the shortage of zinc supply, like good zinc supply. But what's interesting here is the opportunity. All of these are owned by multi-billion-dollar companies, and they need a lot of money to develop those. But ours has the highest grade, lowest capex, and possibly the highest return on investment here, given the market cap that I just mentioned to the peers and the asset value. So the key metrics, when they mined, basically, just to give a little bit of background, when they mined in the 90s, the grade was so high that they had to dilute the ore in order to process it. So in the 90s, they mined about 900 million pounds of zinc, 55 million pounds of copper, some precious metals, 1 million ounces of silver, and some gold, which is equal to $1.8 billion US dollars, most of it coming from zinc, about 1.4 with today's numbers. When we look at what's left and the feasibility study that we just published, with the current resource, we are planning about 1,000 tons per day production, which will provide us the 33,400 tons per annum zinc, roughly 75 million pounds of zinc. And what's interesting is also the cost to produce. It's one of the lowest in North America. We are looking at cash cost of 35 cents per pound. Again, today it's 1.5, 1.6, somewhere around there floating. So a lot of room to play with, but this is like basically all-in sustaining cost is 40 cents. So there's a good margin for the operations. And capex, we mentioned, it's very low given all the site infrastructure and being operational, the dams, the active water treatment plant, the access road, power source, its own grid, there's a transformer, shafts, and 16 kilometers of underground working. So really rapid payback, very compelling project metrics, and with high IRR at 35% and a post-tax NPV with today's correlation is $253 million. So apart from site infrastructure, the location is east of Thunder Bay, right along Trans-Canada Highway, north of town Schreiber, where there's a railway station. And it's in a very good location, low risk. There's a road from the highway to the project, 22 kilometers right to the mine gate. So it has all the easy access to those smelters that are shown here, but also port access, which from Thunder Bay to Europe or from Vancouver to China, if none of these work. But it's highly desirable concentrate because of being free from deleterious materials. I used to have a hard time saying that too, Anthony, but the recoveries are also high. So the concentrate is very clean. It is very desirable for the smelter's point of view. In fact, metal traders, mine developers, and financiers are highly interested in so far. So we'll leverage these advantages, which provides us very small capital investment and short time frame to production. So permits we have as we move forward. I mean, we'll be leveraging on site and near mine infrastructure, which will expedite some of the licensing. I mean, we have we have various permits in place, but currently in the process of obtaining the dewatering permit, as well as converting the Pick Lake claims into mining lease, which is like a patent. The Winston site is on patented land. All of these and the clean concentrate, low risk location, they make it easy for us to move forward. On the social ESG is highly important, not only because of it's the hype, it's the thing to talk about. It has always been in mining. You know, I've been involved in mining for over 20 years now. It has always been there. We just don't market it. But not only that, because of the increased population in the world, the industrialization of the poorer areas, that's ESG has to be the focus as we do things. So while we are mining the critical metals for low carbon future, we will be taking actions to minimize our environmental impact, good sustainable relationship with local communities, and the governance. So we are actually starting to keep track of our ESG record, despite the fact that we are a new company. Our performance, we're willing to keep our efforts transparent and accountable to everybody, all the stakeholders. On the environmental side, this will continue to be an underground operation, which is a bonus, minimal impact. And we're looking at electric fleet, some solar power. I'm already talking to companies and the cost and how to do things on that front. But also we've been using exclusively First Nations or First Nation affiliated companies. Our drilling contractor shown here, Arthur, was our drilling contractor, First Nations owned and operated business, and the rest are, you know, all local people in the area. The talent in Schreiber, Thunder Bay, we're very fortunate about that. So we're looking at increasing our also gender diversity at the management level. And just want to touch base shortly about the exploration potential. Apart from being highly attractive as it currently stands, it also has a high VMS exploration potential. As we start generating revenue from production, we will grow the resources by doing further exploration in and around the mine. So there is multiple drill-ready targets for brownfield as well as greenfield. It's highly underexplored. So there's that to extend the mine life potential also. And so just to recap quickly, Metallum has one of the highest grade zinc projects in the world and most advanced in North America. Highly desirable product on the smelter's point of view. And the exploration's upside to increase the mine life 2 to 3 years is very high. And the valuation discount is one of the best at this time. I know we're running out of time. Anthony, I see you.
Excellent. Thanks, Kerem. Yeah, we are unfortunately out of time, but really strong presentation, really interesting story to follow. And you've covered off the technical aspects so very well. I'd like to pick up on your second to last slide there on the ESG. The day today started off with talking to Mark Bristow, you know, and he was saying how, of course, the environmental is so important, but if you don't get that social piece right, and if we're not actually contributing and spreading wealth around, you can have the best, most environmentally pristine project in the world, but it's not going to matter if we're not elevating people. So with that in mind, I mean, you've talked about using Indigenous companies as part of this. How can you define how the relationships with the locals is looking and what you're doing on that front to ensure that you have that that widespread community support?
Absolutely. I listened to that opener this morning. It was really, really good speech. And our project actually checks all the marks that he was mentioning for tier 1. 100% agreed on the social front, on ESG, on everything really. So I'm an immigrant. I grew up in Turkey. I studied, I worked in Turkey. I saw what the international mining companies did to the local communities. And ESG wasn't the big thing at the time. I know our sister companies in Guatemala, in Mexico, what they are doing. That was our main mandate. Like we're going in the area, despite the fact that this is an old producing mine. There's a history, there are some mistakes in the early days that were made, but despite the fact that local community is supportive, we have our first line of action was to reach out to local communities as well as the First Nations. So far, we have built a very good relationship. They're in support of our efforts. In fact, I'm going there next week to spend a couple of days with the chief and the First Nations, all the council and the stakeholders there. They're very supportive. If we are not going to do anything that benefits the locals, we're not going to do it. That's the end of the line. I mean, we are looking at it on all angles: water, environments, and skill building for the sustainable way. That's absolutely the key for us.
Excellent. Okay, Kerem, we're going to have to leave it there. Thank you so much for joining us, and we wish you all the success in 2022. Looks like you have an exciting asset there on your hands.
Thank you. Pleasure.
Cheers.